All right, for all you first-time investors, I'm sure you have a lot of questions about how you want to set up your company, how you might want to hold title. We've got all your answers today. So I've got a real estate attorney coming in to walk us through the process. Stay tuned. Hey everybody, thank you for tuning in today. I've got a very special guest, Andrew Raines with Raines Law Group. It's a Century City law firm, probably one of the only, well, probably not the only, but one of the good guys that's a real estate attorney. I know there's not many of them out there, but this is one of them. Andrew, thank you for coming in and speaking to us today.
My pleasure, Joe.
I really want to kind of break down, as you're a first-time investor, you're thinking about getting you've got your money put together, you're kind of thinking about making that first foray into it. How do I set up my company? What kind of, should it be an LLC? What should we do?
It's a very good question. Usually first-time investors want to come in and they just want to put their money to work. But it's very important that they protect their liability. So the general structure that we recommend in most cases is a limited liability company.
Okay.
What an LLC is it's a flexible structure that can be structured as a partnership for tax purposes, but as a corporation for liability purposes. It's kind of the blend of both of those best elements. And what it does is it insulates the investor from liability. That structure is something that they can use, and they can use it to buy one property or several properties, or they could set up what we would call a single purpose entity for each property that they buy.
Okay. Do you recommend that they set up, I'm not really sure what is the best way. If you're going to set it up to buy one property, if you're going to be buying multiple properties, is there do you have to set it up differently, or is it the same in every case?
It's not the same in every case, so that's another good question. The issue for most of our investors is how to protect their liability and how to segregate their assets. Often, investors are coming into a transaction through a 1031, which is a tax-driven transaction. So in those cases, the general rule is set up a separate entity for each property that you buy. It insulates your assets and your liability for that property purchase. Those separate entities can be aggregated under a holding company, kind of an umbrella company, where the investor can still control those companies, but they're each separate for each separate property.
Okay. Now let's say I've gone out, and that's for an individual, correct?
Yes.
That's what we're talking about now. Let's say I've gone out and I've got 20 friends together. That'll be a headache, wouldn't it?
Wait, you have 20 friends?
Yeah, there's that too.
Yeah, right.
You've got 20 friends, they've all ponied up $10,000, all of a sudden I've got all this money. What would be the best way to set that investment vehicle up? What kind of investment vehicle, I guess, is a better question?
Very good question. So the issue there is that you would still use an LLC, a limited liability company, but the structure that you would fund that company would be through something called a syndication.
Okay.
And what a syndication is it is a way of raising funds for generally the purchase of one particular property, sometimes more than one property, sometimes a portfolio of properties, but it's a way of getting your investors into a company by giving them rights as members in an operating agreement, sort of like limited partners would have, but yet you as the manager of that LLC would control the LLC and the activities and just report back to the investors on a transparent basis.
Okay. That's a good answer. That was well rehearsed. Wow, impressive. Okay, now I want to ask something.
Mom.
Yeah, there you go. Hi, Mom.
Yeah.
I want to ask something that's probably very painful for most of us.
Are you going to go back to that jail time? Because I really don't want to. Oh.
Probably worse.
Okay.
As a real estate investor,
Yeah.
I can barely get it out. Why would I want to get a real estate attorney involved?
Well, that is a painful question, Joe.
And an expensive one.
Yeah, right, exactly. There are a number of reasons that you want a real estate attorney involved. And those reasons extend both to the investor as well as to the brokers that are involved in the transaction. To answer the first question from the investor standpoint, real estate is one of the largest investments that most people buy. Whether it's commercial or residential or multifamily, which we refer to as commercial, it's generally one of the largest investments and potential liabilities where you're tying up a tremendous amount of money, sometimes in the millions of dollars, to acquire a property that you need to know is going to return a cash flow for you, because that's the purpose of the investment. The acquisition of that property involves a number of different steps. It's not just the price, that's probably what most investors look at, but it's the return on investment, and the ability to make a return on investment means that someone has to look at the investment and analyze the property from a number of different angles. That's called due diligence, and that's something that usually a real estate attorney would handle for an investor.
Right.
That due diligence could involve reviewing physical inspections, environmental inspections, title and survey, which is very important to make sure that there are no encumbrances or an easement running right through a building that you're buying. These are the types of legal documents that a real estate attorney should review for an investor, so that the attorney can recommend to the investor that they either should or shouldn't proceed with their investment from a legal standpoint. From the broker standpoint, a lot of brokers are in a position where they have good relationships with their investors, and their investors will turn to them and ask them to advise them, and sometimes the lines get a little blurred between you're my broker, you're my lawyer. What we like to do is remind brokers that they shouldn't be put in the position of advising their clients on legal issues, because then they're carrying the liability of that advice and the potential for being penalized for giving advice without having a legal license. So it's better for all parties involved to get a lawyer involved and allocate the responsibilities, having the broker handle mostly the business issues and having the lawyer handle the legal issues.
Yeah, it's, you know, a lot of brokers that they do offer their opinion, and then the legal opinion, and you know, you can get yourself into trouble real quick. And I don't know if you're an agent and you've never been sued, it's just not a fun process to go through. So it's really give the reins to somebody that knows what they're doing.
Reins.
And yeah, I realize that's
plug.
What came out of my
Shameless
mouth.
plug.
Yeah. Whew,
Yeah.
but then as an investor, you really, you know, your money is made when you purchase the property, not so much when you sell it. So when you want to make sure that everything is done in the beginning. Make sure all your paperwork is done right. And especially if you have investors, there's nothing worse than getting near the end of an investment that you're thinking about selling and finding out there's been a problem, or you're in the middle of it and there's a problem. It just gets messy.
Yeah.
Okay, now there's something that we do get a good number of people reach out to us on, is the best way to hold title. I guess, can you touch on that for an investment property?
Sure. Well, that's a very good question, because often title is determined by liability, but it also may be determined by the property that you're selling and coming out of.
Yeah.
If you're in a 1031, which is a tax-deferred exchange, meaning that you buy a transaction, and if you buy it within the regulations of the Section 1031 of the Internal Revenue Code, you can defer the gain that you made on the prior sale. Then you generally have to buy the new property in the same entity that you sold the old property. That's one issue that some investors are not aware of, but if they sold the property in XYZ company, the new property needs to be bought in XYZ company in order to qualify for that 1031 exchange. The property will generally be held, whether or not it's a 1031 exchange, in an LLC. And that will be the way of limiting the liability, and also protecting the assets and aggregating the assets so that they belong to that company that the investors invested in. If an investor is simply buying a property without other investors or without a syndication, they should still form an LLC and not hold the property personally. The reason for that is, let's say there's a slip and fall, let's say there's something worse and there's a fire and someone or some property gets damaged, the owner does not want to be personally liable for that. The owner wants to be insulated through an entity, generally an LLC, and that LLC will have insurance which would protect the owner and the ownership in the event of something happening.
CYA.
Right. CYA.
Always.
Protect
CYA.
yourself, protect your assets.
All right. Wow. Are we missing anything?
Absolutely not.
Yeah, exactly. If you have questions, call an attorney.
Yeah, exactly. Call me.
Yeah. First-time investors.
First-time investor. Okay. So one of the issues that you raised, which is a really good point, and it's surprising to me that a number of brokers don't get it and don't advise their clients, is that the way you buy a property is the most important thing. You make your money on how you buy the property. You can't predict how the market's going to be when you sell the property, but when you buy the property, you know the market, you know the comps, you understand where the cash flow is projected to be. That's the point that you have any kind of power or influence over how your investment's going to go. So that is a really salient point, and I'm impressed that that's something that you tell your investors, because that's great advice.
Yeah, it is. It's really, you've got to, I know you get excited about buying your first property, you just want to get it done. You don't want to do that. You want to go out and find the best deal for you, your long-term investment goals. Really take a look at it. So, Andrew, thank you for coming in today.
You're very welcome. My pleasure.
If you guys have any questions for Andrew, go down in the comments section, reach out to us, and we'll reach out to Andrew on your behalf. And if you could please go on to our YouTube channel that we'll put a link to, subscribe, and we're going to keep giving you guys some great advice. So, thank you for tuning in.
Anytime. Bye-bye.